Well, good morning to you, Lucy Ferreira. Nice to see that, well, you can see outside your window. It's still pretty dark outside, but that's what we're here to do, aren't we?
Pretty dark, Alec. Good morning. It's Thursday, the 11th of August, and we're trying something new on the BizNews Breakfast Briefing this morning. We're recording your market report together.
Indeed, and I hope that this is the first of many. Well, lots of interesting stuff happening overnight from my side, Lucy. I'm going to be bringing you up to date on the US inflation figures, a gangbusters run for the markets. Oh, I mustn't forget to put my little happy face on there. You could actually run that applause for quite some time. The Nasdaq is out of a bear market. It's back in a bull market, technically. We can talk about that in just a while as well. But I'll also be bringing you up to date on my thoughts on the Nedbank results. We both worked in banking, actually. Do you pay much attention to the numbers that come out of banks?
Well, we definitely need to be paying attention to them at the moment, Alec. They are just interim results, but there were some interesting notes in terms of dividends and seeing those back at pre-COVID levels, which is a positive indicator, I'd say. And everyone's been looking at bank numbers in terms of where those stocks are going. Okay, so before we get going on the markets and so on, do you want to just tell us what people are reading on BizNews? In other words, those who haven't been on the site this morning, what they can look forward to. So, Alec, there's some big pieces, and as we know, we're fans of Prof. Noakes. There's a piece on Ansel Keys's CHD failings and insulin resistance, which has taken quite a run. And then in political focus, we've also been looking a lot at obviously the future of 2024, what that means for the ANC, and everyone is asking questions about coalitions and where we go with that. So there's a piece with Mike Apple, and he chats to a really interesting analyst and takes us through how we can expect to see that navigated in future. Those links will be in the show notes. But yeah, a lot of content on the site yesterday. Was there anything that particularly tickled your taste buds?
I'm just awed at the way that my colleagues are getting into this 2024 election. It's funny. It seems as though BizNews is the only media company in South Africa that believes that there's going to be a change of government in 2024. The rest of the guys are just carrying on as before. Well, there's a big surprise coming for them as the coalitions are now starting to get things together. So there is a heck of a lot to read there and a lot to watch. And we'll be guiding you every morning into what you can have a look at. But let me get you onto the markets before we get a little bit too caught up in our conversation. Last night, the inflation rate in the United States came out at 8.5%. Now, this is really relevant because in June it was 9.1%. That was the peak, the highest in 40 years. And the concern was that interest rates, which are being increased and in anticipation of bringing down the inflation rate, might not yet start working because the Americans have also brought out some numbers which were pretty useful when you think about their unemployment level down at 3.5%. But July's inflation figure was at 8.5. It was better than had been anticipated by analysts, and as a consequence of that, the market had a really good session last night. S&P 500 index was up by 2%, Nasdaq up by nearly 3%. Some of our favorites, I've got to tell you these because these are stocks that are in our portfolios. Cloudflare, my favorite share of all time, up nearly 10% last night. Amazon and Apple, two huge stocks which are the cornerstones of the BizNews portfolios. Amazon 3.5%, Apple 2.5%, Microsoft 2.3%, Palantir, which had taken a hiding as a consequence of results that did not show the future that the analysts were hoping. The numbers actually beat what they anticipated for the second quarter of the year, but their projections into the future were worse than anticipated. As a consequence, that share price had been down 20% since Monday. Well, it was up 3.5% last night. So even that one came up. Uber, 5.5%. That continues to run. Interesting, Uber and Amazon both had really good financial results, and there's no stopping those share prices at the moment. Spotify was up 4%, Zoom 6%, and Meta, which we've been wondering about, that was 6% higher. Of the South African shares, ABSA is now, it's in our portfolio. That was up another 1% last night, and that's on the Nedbank results. Let me just take you through those, Lucy. 6 months to the end of June. Mike Brown has got a really interesting commentary alongside those results. He's been the CEO there for quite some time now, and the real story in a business is you try and grow the revenue and keep your costs under control, and that gives you what is called the crocodile effect. Imagine that, the crocodile jaws. So don't know how we're going to do it. Okay, so there you are, flat. That's your revenue goes up. If your costs can stay the same, your profits go higher, and that's what happened at Nedbank. Their revenues were up 11%. There was no increase in bad debts. They kept their costs under control. So as a consequence, headline earnings per share were up by 27%. And the numbers are really big. This was 6 months. They made more than 6.5 billion rand. Hey, the banks, they generate the profits, and they can then also translate that into paying dividends. And the dividend, the interim dividend, 7.83 rand, was up 81% and is higher than the dividend of 2019 pre-COVID. So what it means is Nedbank has now recovered from all of COVID, and that has to be good news for the economy generally. Net interest income up 9%. Loans, they advanced 7% more loans. Their cost to income ratio, this is an important number because it lets you know how their costs are doing relative to the asset base. That was at 56%, the cost to income ratio, down from 58% a year ago. They're very excited about their renewable energy investments. They've now got 28 billion rand into that market. Please keep doing it, and hopefully we can overcome the Eskom issues in South Africa. The final point that I'd like to mention here is just what they think about what's going to happen to interest rates in the future. The anticipation is that we're going to have another interest rate increase in South Africa, 0.75% or 75 basis point. They expect the prime rate to be at 9.75% by year end. I shouldn't say they. This is Mike Brown actually saying so, the CEO. He expects inflation, and I'm sure he's advised by his economists, to peak in South Africa at 7.8% sometime in the next couple of months, but to average under 7% for the year. And Nedbank expects to beat the 2019 profits, so complete recovery then from COVID. Koki Koiman, who's a banking analyst, tells us always to have a look at price to book. The price to book of this company right now is at 1 time. So if you took Nedbank and you liquidated it and gave the money back to shareholders, you'd get all your money back now, which gives a very, very good base. Good banks or highly rated banks can get to price to books of 2.5, maybe even 3.5 times in a bull market. But this at 1 time really puts a pretty solid base under the share price. It was interesting to me, Lucy, to notice that the employee number has gone down by 5% in the last year. 1,200 people have actually left Nedbank. They're 26,343, which is interesting because banks in South Africa have been overstaffed by any criteria. And I'm sure they haven't been firing people. It's probably more to do with attrition. So really good numbers from Nedbank. And that lifted the whole banking sector on the Johannesburg Stock Exchange. We saw some useful increases pretty much across the board. And as I mentioned a little bit earlier, that good run by ABSA continues. That's at 181 Rand. An interesting thing on the JSE yesterday was to see a renewable energy company, Montauk, being the biggest increase of the big stocks, the top 100. That was up by 8%. And then Thungela Coal was the second biggest increase. So you had the renewable on the one side doing really well. That's up nearly 8%. Thungela about 5%. And those were the two big winners. Telkom, a big winner as well. That was up by 4%. So Telkom's been really confusing. We've seen the speculation that Telkom would be purchased by MTN. MTN wants to buy Telkom. They've already told us that. And then it seemed like the deal went cold because Telkom's share price came back a long way. And now suddenly maybe it's gone hot again because the share price is up by 4%. Other big winners, Spar was up 3%, ShopRite 3%, Truworths 3%. So there you have and TFG, the Foschini Group, up by 2.5%. So retailers also having a good run yesterday, and the banks firmer on those results coming out of Nedbank.
Wow, Alec, thank you. Not only have you certainly done your homework, it's excellent to hear good news for the BizNews share portfolio, especially in terms of Palantir and Cloudflare, following that 27% rally that we were speaking about last week. It certainly seems like there is good sentiment driving what we're seeing coming from the markets, but most especially in terms of banking, echoing what Koki Koeman was speaking to us about a couple of weeks ago, and looking to the future of the value that we can see in those stocks.
Yeah, indeed. And maybe just to close off with the Nasdaq back in bull market territory, what does that mean? Well, last night, because the Nasdaq was up by 2.9%, it means that it's now gone up by 20% since its bottom in June. And the way the Americans, they love to analyze everything, they look at their data in huge detail. And the analysis here is that when stocks go up by more than 20%, you're in a bull market. When they go down by more than 20%, you're in a bear market. So this Nasdaq has been in its longest bear market now. In other words, sliding, declining share prices since the 2008 global financial crisis. So there's quite a lot of happiness going on in the United States. I think we had a piece yesterday in the premium newsletter to say that it looks like the market has turned there. And it just shows you that it can be self-fulfilling prophecy as well. If the participants believe that Nasdaq is back in a bull market, they'll just start buying more shares, which can then push it even further into a bull market. But still, for the year as a whole, Nasdaq is down 18%. It was down 32%, can you believe, at its worst point in June. So our portfolio, the BizNews portfolio, is very, very strongly focused on exponential shares, which means primarily these big tech shares on Nasdaq. So those who've been following those model portfolios will have a maybe happier day today. And of course, Lucy, we've got our colleagues from the Financial Times in London coming up in just a moment.
We do indeed, Alec. Thank you so much for your update.
Good morning from the Financial Times. Today is Thursday, August 11th, and this is your FT News Briefing. U.S. stocks celebrated inflation at 8.5% in July. Disney's earnings were pretty magical. And social media companies see Livestream Shopping as the future of e-commerce. I'm Mark Filipino, and here's the news you need to start your day. While other streaming services, namely Netflix, are struggling to attract new subscribers, Disney added more than 14 million to its streaming service last quarter. Strong revenues at Disney's theme parks also added to the fund earnings report. Investors seem to like all this too. The company's shares jumped in after-hours trading. U.S. equities popped yesterday after the latest U.S. inflation numbers came out. The consumer price index rose 8.5% year-on-year in July. Now, that's a slower pace than the previous month, partly thanks to falling energy prices. Here's the FT's Ethan Wu with some more details.
Stock markets rose across the board. Riskier stocks, especially tech stocks, rose even more than some of the market benchmarks. Cryptocurrencies and other risky assets also bounced. And, that makes sense. High inflation and rising interest rates tend to be bad for those types of stocks. So the opposite would be good for them. And in the bond market, shorter term bonds like the U.S. 2-year Treasury had a pretty strong reaction. The 2-year rallied Some of the longer term rates, I think, were a little bit more measured. You saw a relatively limited reaction in the 10-year. And I think that's in part because the long-term trajectory of interest rates is not made totally obvious by this inflation report. It really is just one piece of data.
Yeah, so Ethan, is this one piece of data likely to convince the Federal Reserve to ease up on interest rate rises?
I think it may not be enough. And one reason for that is the Fed has shown a clear willingness to not just focus on any one piece of data, but look at the totality of the data and say, hey, what are all these indicators pointing to? And so, this inflation report is good news. But I think the Fed will also be looking at the jobs report we got last week, which showed over 500,000 jobs added to the economy, way hotter, way more jobs than any economists were expecting. And that sort of paints a picture of, yeah, sure, some of the worst inflation may be behind us, but the job market's still going strong. So I think there's some good news for the Fed, but I wouldn't want to overemphasize how much room this will give the Fed to ease monetary policy.
Anything else stick out to you in yesterday's inflation report?
I think shelter, especially rent, is really interesting. And this is because that type of price tends to move pretty slowly. And so if it's elevated, it can keep inflation high for longer. So we did see a little bit of easing in shelter inflation. So that's a little bit encouraging, but that's still really high. That's still much higher than the Fed or anyone else wants to see. And I think that's in some ways a good way of summarizing the inflation picture in miniature, which is that, things aren't getting worse, but that doesn't mean that they're good.
That's the FT's financial reporter, Ethan Wu. He writes our daily markets and finance newsletter called Unhedged. We'll put a link to that in the show notes. The short video app TikTok has this live streaming section, and on it, you'll find people doing all kinds of things, like card tricks.
Check that three of spades out. Check it out how it was.
Singing karaoke. Playing video games. But you're also going to come across people trying to sell you stuff.
We're going to do the screenshot giveaway to win this beautiful necklace as a free giveaway, guys. Just one more.
And it's not just TikTok. Social media platforms are banking on live stream as the future of shopping. And it has taken off in some parts of the world. To talk about where live stream shopping is thriving and where it's not, I'm joined by our technology reporter, Christina Criddle. Hi, Christina.
Hi, Mark.
So, Christina, first of all, have you ever bought anything from live stream shopping?
So I have bought one thing on TikTok Shop, this sort of instant noodle pack. I kept seeing this thing on TikTok and it was like noodles, which you just added cold water to, and then that set off a chain reaction and it basically cooks your noodles for you on the spot. And on TikTok Shop, which is their shopping feature, it was only 99p and it was tasty.
Would you look at that? Feature's amazing, right? You buy prepackaged noodles off TikTok for 99 pence. What a world. But the way I understand it, though, is that there are other social media sites that are also trying to build up live stream shopping, not just TikTok.
Yeah, other platforms like YouTube and Instagram and Amazon are testing out live stream features. And what seems to work well is kind of tutorial type things. So one of the most popular ones on YouTube has been Gordon Ramsay, the celebrity chef, showing you how to cook a festive meal whilst also being able to buy some of the pans that he's using, clicking on that live. The creators who are selling these things are really at the heart of it because you want it because you're seeing them do it. And so your relationship with that person who's in front of the screen is really important.
Sure, makes sense. But Christina, you report that there are some parts of the world where people are much more inclined to buy stuff on live streams than in other parts of the world. Where is it more popular and where is it not?
Yeah, I mean, it's really popular in Asia and especially China. That ecosystem is much more mature. Live stream e-commerce has been around for a while. And in China, the market's going to reach over $400 billion this year by some estimates. They have things like academies where presenters can learn how to do live stream shopping presentation. They have, agencies set up to promote these characters, but also tie up these links with brands. And for the consumer, there's lots of different platforms that offer this, and they're used to shopping in this way. Whereas British consumers maybe aren't responding that well to this kind of very high pressured, aggressive selling environment where things are sold very cheaply. So my sources at TikTok have been telling me that it is running the feature at a cost in the UK. It's desperately trying to make this work. And so it needs to have the merchants on board. It needs to have people buying things. And so to do that, they create these crazy discounts that you wouldn't normally get at a cost just to attract you onto the platform. Because I guess the feeling is, you know, if you buy once on there and you have a good experience, then you're more inclined to buy again.
And Christina, why are social media companies trying so hard to make live stream shopping work?
This gives them a new form of revenue. They take a cut from every sale that's made through live shopping. And when you're shopping on these platforms, you obviously click on things, you either add it to your basket, you check out. That's all giving these platforms extra data on your behavior, what you're interested in, signals which they can use to sell you more things, but also to recommend content to you. And Apple's ad tracking privacy features that they introduced recently have really hit social media companies. So by having these shopping tools on their platform, they're getting those data insights from you, which they can use to sell advertising, to sell products, and to give you content that you want.
Christina Criddle is the FT's technology reporter. Thanks, Christina.
Thank you so much.
Before we go, U.S. midterm elections are taking place this November, which means they're basically right around the corner, and the amount of spending on political TV ads could reach a new record for an election cycle. That's according to the head of Fox Corporation, Lachlan Murdoch. Yesterday, he told investors that in the quarter ending in June, political ad revenues at his local television stations were roughly 3 times larger than the previous record for that same period. As for dollar figures, the ad media investment company Group M forecasts that political ad budgets will reach a record of $13 billion this year. That's $1 billion more than in the 2020 presidential election. You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back tomorrow for the latest business news.
And that's all for today's briefing. If you enjoyed this episode, follow BizNews Radio now to get all of our interviews and daily market updates as soon as they're published on your podcast platform.